Okay, gonna take a quick look here of some commodities for right now here. I'm just doing a test on my iPad here, see how it turns out. Okay, what I have on here is quarterly for Brent crude, going back into the 80s on here. Um, oh, excuse me. 05, oh 06, oh 07, oh 08. Okay, so we have Brent crude coming down here. This basically to me looks like a bear flag trading underneath previous levels. So I assume that oil is be trading sideways for right now. It is working into an intermediate kind of low because we're busting out a channel here. We're pretty much done up in here, so now we're working on this area in between here and what do we have, 27 to 70 is basically it. It'll narrow over time as things normalize. Okay, next we have the Canadian dollar. This also looks like a bear flag. It'll continue lower to go along with oil. I think, like I said, they might have some sort of intermediate type bottom, or at least a short-term bottom for right now. See how it plays out against the dollar, even though Friday's non-farm payroll basically says that we won't see a hike, interest rate hike in September. That leaves it open that there's less political pressure to do it in December because you have to keep on track. The Canadian dollar is here. Expected to try to trade lower. One more leg down as oil begins to normalize. Canada is America's #1 trading partner. We get a majority of our oil from Canada, so the Canadian dollar, that and along with oil is what I watch. Okay, cocoa prices. Basically, cocoa prices are traded sideways with a bias to down. That's how I kind of looked at it. Remember, cocoa is also traded in London, and so you have the pound effect too. I believe that the pound has made a low, and it'll be trading higher, sideways to higher at least, for foreseeable future. Coffee prices. Coffee prices are interesting. One, because it's South America, so their seasons are off. Two, if you look back history-wise, coffee prices are kind of counter-cyclical for other commodities. So here we had a drought in America in 1996, and coffee prices cratered. But in 1994, they shot up. In 1997, the same thing here too. Coffee prices are getting off of a swing here. Coffee is actually the #1 traded commodity. The most used commodity is water, and after that it's concrete. How about that for interesting tidbits? But coffee is the #1 traded commodity. Looks like a swing up to 170. These are pretty good with volume. And then you have your larger type deal here too. So a shot at 170. Coffee is one of those. Put a few more shekels in the pot when playing coffee here. Coffee is notoriously skittish. And then comes, well, if you take out pork bellies, cotton. Cotton and coffee will definitely, you can have limit up, limit down, limit up in the same day. Oh boy. All right, so that's coffee on there, and the next one we have here is copper. Now this is going to be an interesting one for some of you. As you can see here, we're trading sideways, which is basically a basing pattern. But I go back into the 70s and 80s, and that's more basing pattern, and they had to deal with the stronger dollar. The only consumption that we're going to have with copper in America is basically autos and homes. I expect the dollar to continue to go higher, and that'll force commodity prices to come down. But remember, I think it's FCX. They bought Phelps Dodge, and I thought Phelps Dodge at one time was in the Dow. So this huge commodity cycle is done until the late 20s, early 30s. Then we'll have another commodity cycle. But for now, basically, copper is just banging out a sideways channel. What do we have here? 231 to 194 with a bias. Since it's at pivot to roll over to, let's say, like 160 and make a new low. At any type of bounce here over the next couple of months, then I'd take it lower here. You're going to have some people, I think, jumping out to July and stuff, what have you, further out for building. We'll see about that. Corn here, corn prices. I'm looking for bumper crops for this year, next year. I guess where are we at? September. Okay, bumper crops, we'll say. All right, this year, next year it's 7, and then I expect some sort of drought to come through North America in '08 or in '09, and then also a recession in 2020. So I expect corn to come back down into this area. It just happens to um, everything's perfect growing condition right now. There's everything that I saw was wet. I mean, the grain makes grain, a lot of that. So I expect probably next harvest in that we'll be working in the low 2s on corn. Cotton prices here. Cotton prices, as you can see, been trading sideways for a while. This is base building here. What do we have? Flooding down in Louisiana. A lot of this, though, I expect the funds to come in and start bullying some of these again. They have been bullying some of these commodities around, basically switching on a dime. Whatever's going on out there, it's like running rough waters. Back in November, December, when I turned bullish on metals, it took off running, and then there was a pullback of, I think, $40 to $60, and the funds and everybody came out of it on a dime. Then they had to go chasing back after it. So what you have here is these guys are just, and they're getting away with it, which helps out their ego. Okay, so now you have these guys all piling it. What happens is an unforeseen event at every day and every hour and every minute that goes by. They're getting their way, bullying these commodities around. And if something should pop up, then there's the mad scramble. We can go back and talk about the Thai baht, how that all worked out with the Asian contagion and things of that nature. And remember, we still have Russia that we're dealing with. They're trying to sell off assets, and they're just like Saudi Arabia, oil related. Okay. And we have gasoline here. It looks like there's a pullback. I'm going to assume that we're going to have some sort of low, that this is going to low, or this will be an accumulation period. And here, you can see the unbalanced volume up here at the red line. People got into it, and so now they're going to have to get out of it. But I can't see much more than it should stop at around 105. Anything under the 105 area, you want to start accumulating for 17 and 18. 2017 and 2018. See how things go. Two things here. We have the funds and stuff. Once again, they're all bullied. We have a dichotomy in the marketplace here. All right. For the managers, the pain is to the downside, but for the short-term speculators, the pain is to the upside in the market. And so I'm going to assume here that whatever breakout we're going to get one way or another, it should trend. I'm looking for a continuation here of the rotation. A lot of everything that's not in an index is getting pummeled behind the scenes, and it's just going to take a matter of time before we reach the tipping point on that one. And I'll go through bullish percents later on in another video today. But this is gasoline on the downside here. Now the other story here is that in America we're supposed to increase the population by 50% and actually consume less gasoline. So just like we saw with the GDP of the United States kind of waning because of the baby boomer segment, they aren't working 4 days a week, but they're still working, that kind of thing. So they're not consuming the gasoline, they're not working up to par, and they're just in the workforce, and hurry up and get out of there so we can move in. Hurry up and retire. You're 10 years past due, buggers. All right, so that's gasoline. And then you have gold here, which looks like this is going to roll over again. I pointed out on a chart that looked like 1985. I guess it's up in here. Where are we here? It went from 520 to 390, so 290, so 3 from 5 to 3 is what, a 30-40% drop. So 40%, 26.52 is an 800 and something. So somewhere around in this area in here is what I'm looking for right now. I do have a feeler out here to see what kind of reaction I'd get at 681, but I'll definitely take this 865 area here on the downside for gold. Heating oil, basically the same thing. Diesel is how I look at it. We've been switching over from natural gas, or from oil to natural gas for heating and electricity use now since the 50s. So we're basically, heating oil is, I look at that as the proxy for diesel. And same thing, come down to here, maybe about somewhere plus or minus 20 cents on a buck to start accumulating that way. Okay, like crude oil here, same principle. Now, I can swing up to 65 on here. Now, why is because of the hedge funds. Like I said, these guys are bullying this thing around. You can get into a jam, not as much as delivery, but when you have all these tankers out there, just like on the way up where you make the tankers scarce, you can run them the other way. Watch your wet storage on that. They're pumping because they're making money and selling forward. And the prices are. That's what they have. If it's basically you selling and then put it into storage and then deliver it, and the spot price is lower. I'm going to basically say that I'll take a range right now. Here from 55 to 65 on the upper end, and then down here. What is that? From about 37 down to 20, down to 26 again. Okay, so 10 on the downside and 20 on the upside for a channel here, because we haven't really pressed the upper end here. We have it at 51, but if we go to 54, 55, which the funds could do, if they gobbled up everything, where did we get to 42? Gobbled up and turn it. Kind of like what I pointed out in the video on the Japanese yen, where they swiped the stops on the lower side, then went out and traded to a new monthly high. Okay, same principle. They scooped up everybody here, and then we run them into the fall for whatever reason. Anything could be anything. What was it? Exxon Valdez actually made a top in the market in '89, but the recession basically plugged into prices when it, I think, went down to $8 a barrel, and then Gulf War won. Then we shot it back up to 40, and that it was over by October. And by the time it invaded in January, oil had gone from 40 to 20, and you had to put up 100% of margin, so you had to put up 40 grand to play oil. That squelches the speculators when you have to put up 100%. And that was in the middle of Bush's term, right? Yeah. Whoopsie. This is what we need to do. Yeah. You're going to tick us off anyway. Goodbye, George. All right. Okay, lumber. We have lumber. I pointed out that lumber is coming back down here. I go along with interest rates and stuff. We're pretty much filling up and choking off the existing supply, so we're basically forcing the characters into the new home market, because bless America, our reliance is on building homes. So many jobs, from your county assessor, all of it, to the guy that shoves the marker into the ground, the plumbing, blah blah blah. I know it's sad to say, but it's a centralized. America's not as capitalist as you think. It's a centralized plan to get people employed. If it doesn't work on monetary side, then we have to go to fiscal side, and that's where we start spending on stuff. Spending on stuff for projects and that to get the. But see, remember here that we're going to have, I think, a case of the baby boomers coming out of the marketplace, and then we'll definitely have a shortage of workers, plus also the boomers are going to pass on a bunch of wealth, and so that's going to also help with the just-in-time spot shortage of commodities and finished goods. Inflation. Okay, because Even though you squashed the millennial generation, there's another one right behind it that's just as bad as those fucking yuppies of the '80s. Me. They've only their first Mattel popcorn phone or whatever those things were was an iPhone. Okay, so these kids they were born. They had no. This is your phone. I mean, no flip phone, no Nokia, no Ericsson, no. They were there you go, one iPhone, and their Atari was a Wii and all that fun stuff. So what have you? Same thing, different decade. But this one, they were handed good times. Okay, they only know good. They'll be asking why Grandma and Grandpa have a pantry full of dried goods like beans and legumes and lentils and stuff, bags of sugar, 25-pound bag of rice. Well, let me tell you something. When I was, whatever. Okay, so that's Random Lumber. Expect a little bit of a pullback, but I expect it to continue higher with the dollar and that. It's thinly traded, so you're on your own. Natty Gas, we continue to trade sideways on there, so we're getting somewhat of a pullback on here. Remember, Goldman Sachs are bloody bastards. They, I think they controlled or priced or whatever 70% of the natural gas, so they're going to be a force to be reckoned with somewhere down the road here. Like I said, I'm looking for a hard winter to go along with that drought a couple years down the road here. When I was in Minnesota for a couple of months, the water was really high. That reminded me of 1987. Not as much as, what was that, 97? Whatever the flooding was. I think it was 97. Was that 20 years? All right, so gosh, there's another decade squandered. Okay, so on the Natty Gas here, like when I heard 17, you're all over it. I had a year to buy in on this stuff, and so here we're playing it again. You can, my upper target is around 4 on this, so this is how you could play this game. Put up, we'll say 20 grand, buy the contract, and you can sell an out of price option. You can always get back in. Right, you can as time goes by, pick up $1,000-$3,000 a month on your 20 grand. What is that? What's 12/20? What is that? 6/10? 3/5? 60% return. Holy buckets! There you go, kids. Cut that in half if you put up the full whatever the price is. 27.9. Okay, so you put in the full amount. Okay, you put in 30 grand, you sell an option, just roll. If you buy it at, what is it, 280 or 279, sell a 280 call or whatever. If it doesn't work out, you can always get back in. But the deal is, if it's, we're running into a thing where prices are moving up into a period of where it's usually priced in for the winter time. I think October usually peaks, and if the winter is mild, just as raucous as the summer was, then just you don't expect anything, which would be perfect to somewhere around February, March, April, something just gobbledygook. Just buy October, November, December's again, and then we're getting closer to we're a little more action on the deferred contracts, the 2019 and 2020s. Those are a tad bit thin, but you can slap one on your screen. It's out there. So if you what I do is it's those days that it's down bloody, down 14, down 20, whatever. Throw one way out there. I'm not the only one thinking that way, But for Natty Gas, in my case, it's still on an accumulation. Like I said, put up the 28 grand or half that, 14 grand, selling a out of the money option, pocket $1,000-$3,000 a month, collect your 60% a year, and then send me a t-shirt from wherever you're at, XXX. Because I pitch a tent in the morning. Ew! There we go. All right, Natty Gas, Palladium. So we got the Palladium thing, same type of deal here. Looks like a possible head and shoulders, kind of slanty here, rolling over. I remember when Palladium used to be like $50 or something. Oh, I miss FNN days. That was Financial News Network. That was way back when you'd sit around and watch the market on TV. The ticker went away. All right, platinum, basically the same thing, just roll over. Remember the last two, platinum and palladium, are thin. I believe 50-ounce contracts. They can get bullied around too, so just be careful. Silver, it's an industrial metal. It's, as you can see, just draw your trend line. It's down. This is the woulda, coulda, shoulda. It's time to get out of it. I'll be more than when it gets back under $8 again, then I'll start talking about it. Now, some people say, Cav, if it costs $10 to get it out of the ground, why would somebody sell it for $8? Hey, if you buy a car for $100,000 and drive it off the lot and it's worth $80,000 and you have to sell it, there you go. That's just it's already mine. It's already fine. That's just kind of how it's kind of like when the economy blew up. New ships. If you ordered a new ship, it was cheaper than buying an existing ship. You know, well, I guess if you say it's the home builders too. You can buy a brand new home cheaper than what the people overpaid for it. So I look at silver as, you know, once it starts going below whatever, then we go back into the accumulation phase again. Kind of like this 20-year period. Yep. As you get older or whatever, and silver drops, you know, from 8 down to 5. You can tell the story that I did when I was doing that waiter thing when I was in my teens, and I would take my lunch tip money and I'd go buy a 10 ounce bar of silver, okay, for like $35. And then yep. and then well, there was, you know, this is before Minnesota charged sales tax. Yippee-ki-yay. And then well, it's a good standard of living. Massachusetts, Hawaii, Minnesota, that kind of thing. So, all right. So I'd buy, you know, after lunch, I'd have, you know, 3 hours to kill, run over to Southdale and buy a 10-ounce bar of silver, and just did that every day. And I would give them away as wedding gifts, because when you throw the card in the pillowcase, it would go thunk. It would, yeah. 10 ounces. What is that? 12 ounces is a pound. You know, so it's a, geez, you know, yep. And of course you have to get to the bottom, right? You know, so that was all good stuff. But if you find somebody when silver's down here and they're kind of lost, just tell them to score up the 10 ounce bars of silver for their, you know, $35 or $50 or whatever, and sock it away until it hits the fan, because that's what we do. We make it hit the fan. You know, it creates jobs. So that's silver. Beans, some sort, we're in that time period with corn and beans, not as much wheat as harvest. There's been a lot of hedging going on because of prices have just collapsed over the last few years, and they want to get in before we're back down to $6.50 beans and $2 corn and whatever, $3.60 wheat, that kind of thing. And so, but we're getting a little bit of a bounce. You get the hedges pulled off when the grain, right? You're short. You have to make deliveries, so you buy back the contracts and you bring the grain to market. A hedge. Okay, and Zucker. We're up to Zucker. One Zucker contract. There it is. I'll say that we're back into the sideways. Remember that Cargill and Brazil, they put their trading desks together, and so we have sort of that little oligopoly thing going on. A lot of that, you know, just collusion. We need to definitely get rid of the sugar subsidies, and we need to get rid of all the subsidies. Stop being communists here, you know. Just, you know, if you're gonna hand out the money, hand it out to everyone. You know, hello. We don't have inflation. Well, you know, if it only get past the tier, you know, top tiers, you know, whatever. They'll be gone fast enough. All right. Everybody dies. Okay, sugar. I like it. Really hasn't partied. I think the record high up here is like 45, 47 back in the 70s. We go back that far? No. Okay. And wheat. Wheat, now I'm going to start focusing a little bit more on wheat when it comes back down to here, because it has both twice a year, biannual, no, semi-annual. All right, because of you have your spring wheat and winter wheat. So, but the cracker wheat can't be used as the cake wheat. So we have different varieties of wheat: Minnesota wheat. What is it? Hard spring, soft white, winter, hard winter, whatever. It's wheat. No, all the chefs are like, no, what's he talking about? Don't you know about protein and whatever? It's wheat. All right, so wheat's coming down in here, but I'll watch it because of that, and oats should be a telltale sign of watching the cycles. So remember the grain commodities, they move at $50 a cent, kind of like your mini S&P. So if something moves 20, think of it as moving S&Ps or ESs moving 20. Wow. So yes, so the going back to like where we at, the soybeans here. Okay, here's soybeans. Where we at? It's got a drought spike, 96, drought spike. Where's my thing here? Gosh, I hope I'm not recording my button. Drought spike, Well, we got 88, 1059, 1069. Drought spike. Whee! Bumper crop, 650. All right, down to wheat's the last one, right? Oh, what do we have here? Wheat continuous. Yes, we're looking for to start doing the accumulation thing like the soy or the, what's that called? Natural gas. All right, this is interesting. This one popped up on my scan for continuous. Okay, so this is a continuous. So this will tell you when the contango comes out of the markets and we go back into backwardation. How contango works is we'll say something for October is priced 12, and today it's 10. Okay, so when delivery comes, if the price is, it's like VIX. If VIX is stuck at 10, and you go out to December, it's 14. One assumes that by the time you get to December, it'll be back at 10, kind of like the market is stagnant. Okay, so that's the contango. You sell off the back stuff and you just wait it out. You wait when backwardation. That's when there's a shortage. Say for example, VIX is at 14 today and 10 in December. That would be backwardation. So there's front end demand. So you just buy that one. You buy the dips. The other one, you sell the rallies. But we don't want you guys to think too hard on this one. Just try to, first off, you got to get the trend right. If you're buying volatility and the market's been only going up, 09 and 11, that kind of thing, and then you have to go with it. But the little telltale sign that stuff ain't all that happy is XIV, X-Ray Irving Victor. Because it's no longer at the upper, when we're breaking out to new highs, it's not. So it's lost its there's a technical word for it that slipped my mind, but we won't call it momentum. The Dow, all of it could add on 10%, and XIV still probably wouldn't get to its old high. So that I guess what I could do is do a XIV and a VXX spread and see if the telltale signs are look. You can come after me all you want, but we all know what's going to happen in the end of this thing here. One of us will be right, and a bunch of you will be wrong. But that's how it goes. That's just who I am. If you're sitting at a cocktail party and everybody's comparing schwanzes, I'll be over in the corner. I know. That's just who I am. I shine at major turns, and when that dull period in the middle, I'm just horrible. Because in my eyes, the stupid fundamentals come in and go, that's overpriced. I mean, like I said before, if I was reincarnated, I would have been sent back as an Amazon analyst, and I'd have been sitting there going, but the PE is 6,000 and the EBITDA is this, and there's no earnings. There's no earnings. There's no earnings. Just keep buying. It's growing. It's like, no, this will end badly too. Just ask Walmart, and Sears and Best Buy. They all go to zero. So there's that. This, like I said, this was a test. I'm actually recording off my iPad 4 or something, whatever, and volume on another thing, but I just wanted to test it out and see how big this file is, and then I'm on my way. If this works, then I'll make more. Happy Saturday, the 3rd of September, 2016. Bye. Oh yes, don't forget, I still have that special for the yen. Everything yen, $49 for the next, through November. Everything yen. But I'll have to rethink this one after huge moves before the program actually starts. I've been throwing out the freebie stuff, the little teasers, and if something moves 200% or 400% or whatever, it's like, well, hold on, I think maybe I should rethink this one through a little bit here. It's not as easy shooting the fish in the barrel, but hey, that's the learning process, and you get entertainment too. So check that out at my website. Yeah,